Hello everyone. So I'm here with a new video and to decipher industry topics related to investing or trading, we try to get you industry experts. And today we have one such topic called momentum investing. And why it is interesting, because on one side you hear about momentum investing generating, superior returns and beating all kinds of investing style. But on the other side, you hear a lot about words like backtesting, which is a very controversial term. So we thought we will get one of the industry experts who has been practicing momentum investing from last many years. And he's none other than Mr. Manish Dhawan. Manish is founder, Mystic Wealth. Welcome, Manish. And Manish has been a money manager, managing money and running various strategies under Mystic Wealth from last 5 to 10 years. Previously, he was working with companies like Amex, but we would love to know more about Manish because we are not, at least I don't know Manish about your academic background. So Manish, why don't you, let us know about your background? How did you come into investing? How did you start momentum investing, at a time when, it was not a popular word in India, at least?
Yes. Yeah. Hi, Saurabh. Thank you for having me. It's a pretty nice platform, and I must congratulate you on the wonderful work that you're doing. I follow you on Twitter. So let's talk about my background, right? So I'm basically a commerce. I'm from commerce background. I've done my postgraduate diploma in sales and marketing, and after my education, I worked for around a decade in service industry, quality assurance and business development. I've said this before as well, but for the sake of the audience here, my introduction to stock market was just serendipity, coincidence. It was not a planned decision per se. I was pretty happy in my corporate life. And actually in the year 2007, my dad passed away. And I was entrusted with this job of squaring off his position, a portfolio of around 11 odd lakh rupees. And when I was squaring that off, I just simply asked myself this question: on what premise am I selling it? Is this the right time to sell it? And that one question led me to, start exploring the world, and one thing led to another. I basically opened a Pandora box, and that inquisitiveness, that curiosity has still not ended. I mean, I started with Warren Buffett's letters. From that, I got introduced to Charlie Munger, and we all know Charlie is like a voracious reader, and so I started reading everything he was recommending, and one thing led to another. Before I figured out, I had developed a pretty decent, strong infatuation and interest in the stock markets. So in this journey, I got introduced to this person named Joel Greenblatt, and I read this book, You Can Be a Stock Market Genius, where he was talking about spin-offs and demergers. And that particular book intrigued me so much that we decided to backtest it and test it. Actually, backtest was not even a word I was aware of back then. So we decided to figure out if what he's saying actually works in India or not. And so we started doing manually, and I'm saying we, it was just me all alone, one single person. Later on, I realized during one of my presentations at IIF that my now partner, Dayanand Deshpande, was also doing a similar thing, investing in demergers and spin-offs. We started sharing notes. We met there for the first time, and we realized that there's a huge edge in this, and we kept on playing that. And when the money was good, we were compounding money. In hindsight, I can say it was thanks to the bull run, because, a bull tide basically carries all the boats. And so even our dirty boats were riding high. But back then, of course, we were high on the confidence. We thought that we're on to something. And so in 2011, we basically started our services. Prior to this, we were just managing money for ourselves, family, friends, acquaintances. That money kept growing, so it was big enough for us to figure out that we can probably do it full time. 2011 is when we incorporated Mystic Wealth and started the advisory business. So this is the brief background.
Great. Thanks, Manish. And I understand though you run multiple products under Mystic Wealth, but one of the products which you specially oversee is around the momentum investing. And my understanding is there are different styles of momentum investing. So can you educate the audience more about what are the different styles of momentum investing, and which is the one you have picked and why did you pick?
Yeah, so that's a good question. Sort of momentum investing can basically be divided into, if you're either doing it on index or you're doing it on stocks. And within that, you can further divide it into, there can be a subdivision saying either you are doing it discretionary or are you doing it systematic. So this in a nutshell is what the entire segregation is. Now, the one that we are doing is momentum done on stocks and done systematic. So that is the sec that we are following. And back then we did this interview with who's who of the momentum world. So I don't know if the audience is aware. Back then we started this podcast series under the name of Stoic Podcast. Me and Puneet Khurana, my friend, we started doing this podcast, and we covered almost everybody in the momentum world, right? From Gary Antonacci of dual momentum fame, Wesley So. Sorry, did I say Wesley So? It's Wesley Gray. Wesley So is a chess player. Sorry for the confusion. Wesley Gray of Alpha Architect. Also Mabane Faber.
Just to interrupt, Manish, I think you have a lot of interest in chess, and I think recently you sponsored some event in chess, right? If I'm not wrong, I saw one of your tweets.
Yes, we did. We tied up with Chessbase India, which is amazing organization doing pioneer work in promoting chess in India. And I have interest in chess, and I'm teaching my kid chess as well. And this is when we spotted this problem area that chess appears to be a very easy on pocket sport, because all you need is board and squares, right? And pieces, right? But in reality, while teaching my kid and while speaking with the coaches, I realized this is one exorbitant sport. Chasing these IM norms requires world travel, and the coaches' fees are not cheap either. And so, a lot of talented people, talented kids, are not able to pursue this further. So, although we are just launching it with 1.5 lakhs, it's hardly a trickle. But I'm sure this will definitely fulfill some short-term goals of the aspirants.
Yeah. Great. Please go ahead. Continue.
Yeah, so we did podcasts with these guys, and that's when the segregation was even more crystal clear. Now, back after speaking with Gary Antonacci, I actually did a back test of whatever he was telling in the book on Indian markets. So what I did was I did Nifty and gold and N100, which is Motilal's product for NASDAQ. And I did the same absolute plus relative combination, which is called dual momentum. And surprisingly, in fact, no surprise at all, the edge plays out just the way it played out in his book. The drawdowns get reduced and the returns are better. But I did not practice it and did not launch any product on this because of primarily one big reason is because I could not fathom enough courage or guts to go 100% long in gold. I mean, let's say I'm managing a corpus of around 3-4 crores and a sell call comes on equity and the system says go long on gold. Now I cannot really buy 3 crore worth of gold with zero exposure on equity. So while the backtest clearly suggests that there is an edge, I see practically this makes no sense for me to pursue it. And that's the reason index wali side pe main gaya hi nahi. I didn't do it. Second reason was the compounding difference. I'm of the opinion, and I may be wrong, but my backtest and my understanding tells me that if you're already rich, that is when you're supposed to do momentum investing on index to maintain that status quo. But if you're not rich yet, then to get rich, you need to take an exposure of momentum on direct stocks, because there the compounding is higher. Sure, the drawdowns would be higher as well, but it's totally worth the effort because you give yourself an outside chance of creating wealth. So this is the reason I selected momentum investing on stocks. And then the question came between discretionary and mechanical. Now, of course, discretionary guys make a lot more than the mechanical guys, but the percentage of successful people in that is very low. So for every one Mark Minervini or a Jesse Stein, you would come across at least 1,000, if not 10,000 people who would go bankrupt. And the reason is that when you are doing something with your discretion, your individual biases would come in, and then you are basically it's not a system, it's the person who's trading. And so let's say if you're going through a divorce, it will show in your P&L. And let's say if you have got some personality flaws, you will screw it up. So I was not that confident that I will be doing, I'll be a Mark Minervini hitting 300% returns every year. So I went for the safer option, stocks instead of index, and mechanical instead of discretionary. Okay. So I hope I've answered your question.
Sure, got it. And let's get a little bit into the detail. And I've gone through some of your interviews, and one of the beautiful interviews you have given with Moneycontrol, where I think you have explained the whole topic in detail. And you did speak about the absolute momentum versus relative momentum and the time periods which we need to take. So for the audience, if you don't know about a lot of this, the details are below in the description box. You can go, you can read those articles. So Manish, my question is, somebody might say that a 3-month based momentum might work better. Somebody might say a 6-month based might work better, 12 months, and even you could back test. But what has worked in the previous decade may or may not work in the next decade. And I remember seeing one article in Seeking Alpha where they compared the 3-month versus 12-month momentum, and it worked in certain time, it didn't work. So from your experience, for somebody who wants to practice, what would be your suggestion? Should we go for a mixed strategy of mixed ranking with 3, 6, 12, or build 2 different portfolios? How one should handle these kind of uncertainties?
So that's another wonderful question, Saurabh. And it's just not for 3 months or 6 months. This problem would accrue in every part of your code. So let's just say within momentum, you have coded something which is capturing the early momentum, the stocks which are setting up from their bases and coming out of their initial bases, which have not rallied much. Or there can be a system where you're catching the continuation patterns where the stock has already rallied too much, maybe 100% move has already happened, and now you're catching the continuation. Then there can be segregation based on, let's say your filter is 52-week high. Then there can be filters where you're only interested in the stocks which are hitting all-time highs. So all these would work some of the times, and there will be times when the others would be working. So it's like the same standing in a queue bias that you go through. अपनी line हमेशा लगता है कि धीरे ही चल रही है, but the point is अगर तुम line change करोगे, then you would realize कि वो पुरानी वाली line तेज चलने लग गई. So the idea is that at the time of backtesting, sure, what you suggested makes sense. You can backtest anything. You can do a combination 3, 6, 12 months का weighted average लेके उसका multiplication लेके you can calculate the score and rank them. Do whatever. But the point is सब कुछ करने के बाद भी you will come across situations where दूसरे वाले की line तेज चल रही होगी. So do all the research at the time of backtest, but once you've done it, then just shut it and close your eyes and follow it blindfoldedly. And there will be bad times and you'll be very tempted to second guess your system. The idea is to not do it and just go with the flow and take the pain.
Got it. Thanks for the reply. Another question where more from a technique, it's more from the domain perspective. So like I come from a data science background, and again, when I started my career, it was a very new field. And people who were from industry side, they came to it. People who were mathematician, they came. People who were software engineers, they came, because somewhere it was a hybrid skill. And I see similar kind of thing which is there with the quants and the momentum world, because all this 52-week high low, in some way you spoke about continuity of a pattern, which somewhere relates to the technical analysis world, because you read that on charts, versus somebody who can tell that I want to the whole cam slim approach and all, which comes by mixing the technical with the fundamental, where you're looking for a growth and all. So for somebody to practice momentum investing, is it enough only to know coding and basic of mathematics, or does he need to know technical analysis, or does he need to know fundamental analysis? So what is your experience and what is your view? What is required and what is not required?
Very interesting question once again, Saurabh. So let me divide, first of all, the technical part of it. We'll come to the others later. As far as the technical analysis is concerned, as long as it can be quantified and it's objective, that part of technical analysis can be amalgamated into the quant world. But technical analysis gets really subjective and stupid, sorry for the language, but where you again playing from the gut, like something like a trend line. If it cannot be quantified, if I give a graph, a chart to 10 people, and 10 people are drawing different trend lines on that, that's where you lose me completely. That's where you're on your own. And again, the biases would creep in. You will see what you want to see. And then you are trading based on your personality, and the results are discretionary in nature and cannot be quantified. So technical can be divided into something that you can quantify and something which is basically playing through the gut and the feel. So the feel part of it cannot be quantified, and they're on their own. Similarly, there are various Elliott waves and whatnot. As long as you can quantify it, you can probably shift to the world of quants. The point is, 2 or 3 factors have to be clear. And it should not be post facto. It should be before the decision has to be made. Your buy should be clear. Your sell should be clear. Your position size should be clear. There should not be what if scenarios. If there are scenarios like agar ye hoga aur wo hoga aur ye hoga, like a lot of wave theories go about, and then this wave is disqualified based on what will happen in the future, that is all bogus, and that's not quant at all. So ye hua technical ki baat. Fundamentals ki I sure, if you can backtest it, canceling works like wonders. So people like Mark Minervini and Jesse Stein, the books that I have read, these guys mix the 2 things, and they've done it successfully as well. But they're discretionary in nature, and they're not automated. The reason why people use the help of fundamentals, and this is again my opinion, I may be completely wrong. People, why they use fundamentals is because they want to get into the comfort zone to bet more. Because once you know your company fundamentally, you're not just relying on a line chart, and then you can probably bet big instead of a typical momentum portfolio where you're betting 2, 3, 4% of your entire corpus. Then you can go big and take a concentrated bet, let's say a 30% of your portfolio or 25% of your portfolio. That's when mixing fundamentals and technicals probably makes sense. I personally do not like the idea of concentration and momentum, and like it to be diversified. 5% is how I like to start my position. And so when that is the case, when I'm anyways betting 5%, even if I go wrong completely, it goes to 0. Even if my chosen stock goes to 0, all I'll lose is 5% of my portfolio. I don't think it's worth my time and effort to worry about fundamentals.
Got it. And one more question on momentum investing, because as you said, no strategy will work forever. So there will be times when even momentum investing will not work. So like, is momentum investing also cyclic? And if so, there will be times when it will not work for you. So how do you handle such scenarios? Like, what are the times when momentum investing works versus when it doesn't work? And when it is not working, do you try to look for an alternate approach, or how do you handle that situation and still, maintain that alpha for yourself and your customers?
Another good question, Saurabh bhai. So depends on your time frame. If you're really looking at a long time frame, let's say your entire lifetime as a time frame, let's say you will live till 90, then we are doing a 90-year backtest. A little less because your working life would be a little less, but let's, for the sake of the example, 90-year backtest. In a 90-year backtest, momentum, because it's playing on the human emotions of greed and fear, will definitely work. Because उस 90 साल में कोई तो यूफोरिक टाइम आएगा जब बुल रन पागलों की तरह चल रहा होगा, और कोई भी तो बियर रन आएगा जब vertical fall होगा, and your momentum will save you because you've taken a cash call. So in a 100-year period, 90-year backtest, momentum will work. There is no doubt about it. But to answer your question, there within this 90-year period, there can be a lot of time jab momentum would suck and will test your patience and will you'll basically start questioning the strategy. आपकी रात की नींद भी खराब होगी. Now that will depend on how much money you have put in your strategy. To that, so मैं आपके क्वेश्चन का दो पार्ट में आंसर देता हूँ. पहली बात तो नींद कैसे आए. उसके लिए my suggestion is always make sure that you have done a proper asset allocation. गंदे दिन तो आएंगे ही आएंगे, इसमें कोई शक नहीं हो रही. मैं मोमेंटम की बात नहीं कर रहा. This is true for any strategy on earth. आप वैल्यू इन्वेस्टिंग में भी अगर जा रहे हैं तो there will be a long stretch periods of time जब वैल्यू काम नहीं करेगी. Those valuable stocks would remain valuable, right? And momentum में भी ऐसा टाइम आएगा. ज्यादा पीछे जाने की जरूरत नहीं है. 2018-19 ऐसा ही टाइम था. We went through a 28% drawdown, और वो एक साल और भी खिंच सकता था. That would have really thrown cat among the pigeons, right? So my answer is asset allocation. Make sure you are putting only that part of the corpus in momentum जिस पे आप drawdown झेलने की हिम्मत रख सकते हो. If that's not the case, then dilute it with gold. So we did this very interesting YouTube video. Google it, Mystic Wealth Asset Allocation, and where we have shared the graphs and the backtest as to what happens to your equity curve. Let's say अगर आपने 80-20 Mystic Wealth Momentum goal किया होता, या 70-30 किया होता, या 60-40 किया होता, या 50-50 किया होता. Now the answer, there's no right answer. Depends how conservative you are. So if somebody is conservative, 50-50 is a good deal for him. And somebody is aggressive, 70-30 is fine for him. And so somebody is really aggressive, then 100% MWM is fine for him. So the answer lies in asset allocation. To answer your question on backtests and what there can be bad periods, surely there will be there have been bad periods in the past, and there will be bad periods in the future as well. 2011 was a bad year, 2018 was a bad year, and I'm sure आगे भी 10 साल में ऐसे बहुत सारे साल आएंगे when momentum will test your patience.
Got it. Thanks for the elaborate answer. And because we are using this word backtesting, and I have seen on Twitter the kind of fun this specific word is made of, I think it is time that people really understand it in the right sense, because लोगों को backtesting का मतलब ये लगता है कि इतना return आ गया, and that is what is backtesting. So can you enlighten us on what is backtesting all about, and what are the top n metric which you look when you backtest, and in your backtesting strategies what are the top things you see, and according to you what is a successful backtested model versus a failed model? How do you differentiate between the two?
Yeah, so this is a very interesting topic. I think this uproar started with Shyam Shekhar's tweet, if I remember, where he said something on the lines of backtest is Bhakjodi. So I know Shyam Shekhar personally. I've met him. He's a wonderful person and a very intelligent person as well. But I think it's a little exaggerated. And I tell you why it's exaggerated is because what is value investing about this? How is value investing not a backtest? Would you indulge yourself in value investing if it didn't work. The only reason you're indulging in something like value investing is because it worked in the past. Something that worked in the past and you're trying to repeat it, isn't that what a backtest's definition is? Right? So abusing backtest makes no sense at all. Everything that has worked and you're trying to repeat it is working on a backtest. Now, his rebuttal is correct and his apprehension is correct because people extrapolate things to crazy levels and curve fit the data. Now, I'll give you an example. This is the biggest problem in backtest. As you increase the number of indicators, you have to cut down the backtest score with that same factor. Let me explain it. सोचो अगर आपने 6 indicators यूज किए थे अपने बैकटेस्ट के लिए, राइट? लेट्स से आपने बोला बोलिंजर बैंड्स इतने कॉन्ट्रैक्ट होने चाहिए, देन आपने बोला आरएसआई यहाँ होना चाहिए, फिर आपने बोला विलियम परसेंटेज आर या जो भी आपके इंडिकेटर्स हैं, तो तीसरा ये हो गया, चौथा कोई हो गया, पांचवा कोई हो गया. When you have added 6 factors, ये 6 चीजें होंगी, then you buy. Now whatever the result of your backtest is, you have to divide it with that factor of 6. क्योंकि आपने 6 एट्रीब्यूट्स ऐड किए हुए हैं, that is total curve fitting. और आप जब 6 के फैक्टर से किसी चीज को रिड्यूस करोगे, that backtest की efficacy amounts to 0. And so the critical feedback that people give to backtests and the baloney that people come up with, 60% CAGR, 70% CAGR, 80% CAGR, that's a joke. And so that feedback is well taken, that is correct. क्योंकि अगर आप इतने सारे फैक्टर्स ऐड करोगे, then you totally curve fitting. ऐसी चीज दोबारा कभी फ्यूचर में होगी ही नहीं, और होगी भी तो रिजल्ट कुछ और होगा. बट इसका मतलब ये नहीं है कि बैकटेस्ट करना ही नहीं है. If you are just doing pure naked backtest on price, just one factor which is telling you जो ऊपर जाता है वो ऊपर जाता रहता है, that's the only thing we are backtesting. What goes up keeps going up. Sure, mean reversion happens, but it happens later. उससे पहले हम निकल जाएंगे, and we are just backtesting that. And if that edge plays out, that's what, in a nutshell, what momentum investing is, isn't it? Now, to answer your question, the second part of the question, how do you do it and how do you make it more robust? There are a lot of things these days. So there's something called Monte Carlo simulation. What essentially it's doing is that to rule out the role of randomness, it's creating 1,000 simulations of your equity curve. But let's say a dart throwing monkey is doing it 1,000 times, so 1,000 equity curves बना देगा. It will tell you the probability कि there are chances कि ये आपका जो system है इसमें 60% का drawdown भी हो सकता है. Although उसके chances सिर्फ 10% है, लेकिन but the chances are there. Similarly, there is a 10% chance कि ये 70% CAGR भी दे दे. But of course वो देगा नहीं, it's just a 10% chance. The crux of the 1,000 simulations, उसमें से almost 990 center में ही रहेंगे. That is your essential crux of the Monte Carlo simulations, giving you a broader view of understanding. See, backtest is nothing but giving you probabilities. Surety तो दुनिया में किसी भी चीज की नहीं है, and that is true for value investing as well. You are doing value investing primarily because it has worked in the past. ऐसी कोई guarantee नहीं है कि वो आगे भी चलेगा. So yes, that in nutshell what backtesting is.
Because you highlighted, about how backtesting has been misused. The other area I see where there is a lot of scope to play with backtesting is the duration of the data. And even though we say that 10 years is long period, at least on the asset class like gold and all, I have seen, you pick one 20-year period, the returns will be different, and you pick another 20-year period, it will be very different. And from which year you starting your model itself can have huge implication in terms of whether that starting point was the best point. So from a data longevity perspective, as well as backtesting, I know different strategies may require different kind of data longevity, but what is your view on in a generic manner for any kind of momentum investing, what is the data duration one should take and how that testing should happen in terms of the time-based bucket testing and all?
So it depends on number of trades, Saurabh. So let's say if you're doing an intraday trading, where your decision making is happening, let's say every hour or every 30 minutes. That ways, even let's say last 2 years data would be very comprehensive for you, because उस 2 साल में सारी windows cover हो जाएंगी. There will be bull period, there will be bear period, there will be sideways period, right? Because 30 minutes में ये सब कुछ हो रहा होगा. Similarly, if you the idea is आपको एक पूरी cycle up to down cover होनी चाहिए, जिसमें range market भी हो, bull market भी हो और bear market भी हो, so that you can figure out कि आपके system कितना suffer करता है worst case scenario. So for momentum in particular, see any momentum even coded very loosely will make money in the bull run. You need to code कि वो bear market में कितनी जल्दी आपको बचा के निकालता है, और range bound market में it will suffer, there is no doubt, but to make sure कि वो suffering आपके pain threshold से ज़्यादा तो नहीं है. So these are the things you have to calculate.
Sure. And Manish, can you educate us more about your momentum investing products? Like, as you said for one of the questions, that there is a buy decision, there is a sell decision, there is asset allocation decision. So from a framework perspective, do you use only one model to decide your buy, sell, asset allocation, or is it different? How do you take care of your buy? And we are not asking for, of course, there is an IP factor, but keeping the IP aside, in terms of process, in terms of factor, in terms of framework, how do you take decisions on buy, sell, and allocation?
So there is no rocket science to it, Saurabh. If somebody really gets down to it, and if somebody is a DIY investor, then it's not something. See, it's very easy to say that there is IP behind my product and I will not disclose anything, but that will be a lie. ऐसा कुछ बहुत ही out of the world नहीं कर रहे यार हम. Or I'm taking the liberty to say it for almost all the momentum products in the market. I mean, you can, for marketing sake, say कि तुम इसमें machine learning लगा रहे हो, फलान ढमकान लगा रहे हो. But for all practical purposes, if you spend 30 odd days on any good forum which is talking about momentum investing, you will know everything there has to be known. At the end of the day, you are chasing momentum. You are figuring out momentum by various ways. कोई ऑल टाइम हाई देख रहा है, कोई 52 वीक हाई देख रहा है, कोई लास्ट 12 मंथ के टॉप परफॉर्मेंस देख रहा है, कोई लास्ट 3 मंथ्स के देख रहा है, कोई लाइक वी डिस्कस्ड अर्लियर, कोई 3, 6, 12 मंथ्स का कॉम्बिनेशन का वेटेड एवरेज देख रहा है. उसके बाद somebody is trying to be extra smart, वो उसकी volatility एडजस्ट कर रहे हैं to make sure that there is no frog in the pan syndrome. जो अचानक से ऊपर चढ़ रहे हैं उनको डिस्कार्ड कर रहे हैं, जो कंसिस्टेंटली ऊपर बढ़ रहे हैं उनको रख रहे हैं. Then they are trailing it. There are various ways of trailing it. कई लोग supports को quantify करके ट्रेल कर रहे हैं, कई लोग ट्रेलिंग स्टॉप लॉस के साथ ट्रेल कर रहे हैं, कई लोग सिंपल वर्स्ट रैंक हेल्ड के साथ ट्रेल कर रहे हैं कि अगर ये टॉप 20 से नीचे चला गया तो मैं बाहर निकल जाऊंगा. So pretty much the writing is on the wall. यही 5-6 चीजें हैं बाय साइड पे, यही 5-6 चीजें हैं सेल साइड पे. If you can code it, you can make your own system.
Okay. And do you think coding is a must, or still with the Excel kind of tools also momentum investing can be practiced?
So something as basic as momentum investing can be done on Google Sheet. Of course, you have to be decent with Excel skills. You can do it on Google Sheet itself. But if you want to check the efficacy and if you want to run Monte Carlo simulations, then you would need probably Amy Broker, Python, etc.
Okay. And Manish, I think you had almost a 10-year plus journey, practicing momentum investing. So, what were your 3 biggest moments? We all work towards something and we realize, okay, this is what I wanted to achieve. So what were your 3 biggest aha moment? And what has been your 3 biggest learning that, you realized this was a mistake and you later on corrected it?
So, very good question again, Saurabh. One of the aha moments for me was when I looked at my data back again, and I realized, and see, this is something Jesse Livermore has quoted before, but this has been my aha moment after looking at the data itself. It's the sitting that makes money. not your buy decisions, not your sell decisions. And why? Because, I did this pretty interesting exercise. One of my clients actually asked me to do this, and so I did it. In the year 2001, we ran this hypothesis. What if we had not done any rebalance at all the entire year? Funny thing was, it was an aha moment, was that our return would have been same. So all that tweaking and shenanigans for the entire year amount to nothing. When a bull run happens, money is made by just sitting tight on your winners and riding them. Sure, we did not do badly, we did well as well, but we could have achieved the same thing by not doing anything either. So the aha moment was, the idea is to figure out the bull run and ride it.
It's much simpler than all the effort put.
Yeah. And the second aha moment, again, looking at the data, see, there have been times when I've tried to act smart, booking profits, the stock in question has rallied too much, let me book half and let the other half follow the system. And just looking at the data, I realized all those shenanigans basically amount to nothing. System is actually smarter than me. See, this is a human ego, and I am suffering from that. I'm pretty sure everybody else would have their share of this suffering as well. You get a feeling that I am the one who has coded the system, so I'm pretty sure that I'm smarter than the system. I can outsmart it. The aha moment hits you when you look at the data and you realize that while you have coded the system, that does not make you smarter than the system. The system still is smarter than you, because all these shenanigans and getting smart, sure, you might get smart once or twice, outplay the system, outrun the system, but in the long run, over 100 trades, you'll realize that you have not achieved anything by these shenanigans. So these were the two aha moments for me.
And Manish, if somebody is just starting momentum investing, what are the key resources you would guide? So of course, I think the Stoic Investing podcast, I think it is one of the best thing which has happened, and we should go and listen to it. Your website is there. There are other people who are doing very good work, like Weekend Investing. They do a lot of such podcasts. But in terms of academic resources, what are the best books or best websites or blogs or YouTube channels? Anything you can suggest? And apart from some of the resources, including yours, is there anything else on the Indian side we can look at?
Yes, you can. And so first thing that I would recommend the audience here is to Google search our article that we wrote for Moneycontrol. Just write Mystic Wealth Moneycontrol Momentum. I'm sure it will be the first or the second search result. In that article, at the end, I have mentioned 5 books. Go through those 5 books. There's Gary Antonacci in it, Wesley Gray in it, and Klinau in it. Read those books. And the second thing that I would like to suggest is to enroll for Prashant Krish Slack channel. I'm a member there as well. It's a pretty nice channel where all the practitioners share what they are doing, their results, their back tests, how they're doing it. And if you're not interested in taking the subscription service, and if you have time to do it yourself, then just be part of that Slack channel and you will pick up the nuances in no time.
Great. In fact, Prashant, he runs another blog called Portfolio Yoga, and I think he blogs a lot of interesting articles. So, people, audience, you can visit his blog also. In fact, we would love to have Prashant also sometime.
Yeah.
Okay. Thanks a lot, Manish bhai. I think this is very insightful, and anybody who wants to practice momentum investing, I think there are a lot of pointers in terms of where to start, how to start, what to do, what not to do. And the best way is to learn from somebody's journey who has done it. And that is what we have tried to do through this. So thanks a lot for your time. And I hope to see you again sometime, helping and guiding us and the audience. Thanks a lot, Manish bhai.
Thanks, Saurabh. Thanks for having me.